Welcome back. You're watching Stock Watch this week, and joining me to unpack your stock-related questions this afternoon is Mia Kriegler from Kruger International. Start sending your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Mia, thank you so much for your time. Quite a lot of interesting moves that we are seeing there on the JSE and also on the currency front. I'm still even quite surprised that the Rand is trading at just below 18 Rand 80 against the US dollar. Of course, I know that that is weaker than we had seen last week when it was around 18 Rand 50, but I would have expected it to be over 19 Rand now against the US dollar, considering that expectations for rate cuts have actually been moved further down the line. What are you making of how the Rand is trading at the moment?
Yes, well, as we've said so often on the show before, is that the Rand is really at the mercy of the dollar. And the dollar has, before what we've seen from the CPI numbers coming out on Wednesday out of the US being a much weaker print than we expected, the dollar was actually trading weaker. So we had seen Rand strength only because of the dollar weakness, really. And that happened, and that brought the Rand to quite a strong level. And then when we started seeing that deterioration, it came through to where we sit today. You're right. There's a lot of things playing in here, most predominantly the dollar movement, but also we saw when we got those polls saying that the ANC is losing quite a lot of traction in South Africa before the election. The Rand also took quite a knock, quite an extensive, immediate knock on that news. So it recovered again, but I think that there's going to be so many different inputs into the Rand that's going to play sort of short-term volatility havoc on the currency over the next while before we see the election results, and as long as we're in a situation where it's uncertain to when first rate cuts will come in the world.
Yeah, indeed. I think also we're concentrating so much on what the central banks are doing that we also forget about the election risk that does exist domestically.
Absolutely, yeah.
Yeah, indeed.
Yes.
Well, quite interesting. Pan-African, let's look at the gold counters, Mia.
All right.
Pan-African Resources up 9%. Harmony Gold up more than 7%. Implats also up by the same margin. Anglo Gold 7%. Goldfields 6%. I mean, is gold king at this point?
Well, gold has seen a very strong run. There's been various reasons for that over the last year or so, but it has been one of the strongest commodities alongside oil, really, over the last while. And the main reason, the biggest reason for this has been central banks buying, specifically the Chinese central bank. And it's a case of the Chinese central bank really diversifying their balance sheet. They've been holding mostly US debt and dollars, of course. So they've been diversifying that away to gold over the past year, and that's created an enormous push in the demand for gold. And of course, that's driven the price to where we see it today. All the counters on the local side benefiting from the stronger price, despite all the problems we still have in South Africa with the infrastructure of getting the gold to the harbors, getting them out of the harbors and out of the country. So there are still operational challenges, many for these local companies, over and above the infrastructure, but the gold price has really helped push up these commodity counters' names and prices.
Well, quite interesting because you're looking at a counter, for example, that does have gold operations, although it's largely pegged to the PGM prices. Sibanye Stillwater yesterday was heavily in the red, and now today it's actually bounced back. And I don't know if it is the gold situation or if it's just investors. You know, yesterday they saw an opportunity and they were like, you know what, it's a bargain. Let me go in today.
Yeah, so I mean, we've heard from Sibanye that they're going to have more layoffs. They're focusing a lot on the cost containment of the company. They have to keep the company profitable. Of course, the gold price is benefiting them, but PGM, as you said, is a larger driver at the moment. The company has had a terrible sort of year due to bad press, due to bad sentiment hitting the company. It just shows you how really difficult this trading environment in South Africa, in an emerging market like South Africa, with all its issues, all its sort of very soft employment problems, and all of those have on these companies. And despite all the possibilities that Sibanye has as a company on their balance sheet, moving into diversifying the portfolio, they were hit firstly by commodity prices coming down, and then secondly by a lot of bad press and bad sentiment around the company. So it could be sort of a recovery from what we've seen, but still a lot of volatility in that share. That is the issue in South Africa also. As you see a company here, we don't have as many participants in our market, and there's a lot of speculation also going on these companies. So unfortunately, that's a detriment to these companies' prices.
Yeah. And before I move on to the questions, Amia, also what's interesting is the banking sector in a downbeat mood today. First Rand declining 3%, Capitec being the biggest loser there, down more than 3%. And of course, this has been a sector that investors have been quite optimistic about. And I'm wondering, if there is a certain change in sentiment, particularly because looking at the Rand is still, I guess, quite resilient. And then you're getting these banking counters, trading in the red. Or if this is maybe a buying opportunity because banks will still perform, quite solidly.
Yeah, so it's a difficult one. I mean, we've seen strong numbers, for instance, from Standard Bank. The annual profits jumped over 27%, but we still saw the price come down quite a bit. Yeah, so it's hard to say what's driving the sentiment around it. Again, we've seen the dollar strength and the Rand weakness coming into play, which could have an effect. It could be a tilt in the market. Also, the fact that any sort of expectations of interest rate cuts could influence that. But I wouldn't say, because higher interest rates are really profitable for the banks. The weaker economy in South Africa is tough for the banks. So there are so many variables that's playing in here. So on a daily move, it's really hard to say what drives the sentiment around these counters.
All right. But I mean, would you be keen on banks at this point? Are there any, particular banks that you'd be particularly keen on, including also Investec, a bank that we actually don't really factor in when we look at the SA banks?
Yes, I mean, once again, we're starting to see the earnings coming out of the US today with specifically banks. And when you've got such a large pool of opportunities, it's hard for me to really only keep my focus on the local banks. But yes, on the local side, our banks still have very strong balance sheets, so not bad investments. The issue here is the very weak and slow economy that they're struggling with. The fact that they're so exposed also to government debt, etc., is all of these things are a little worrisome when you compare them to the opportunity set that you get abroad. So yes, I mean, still not bad, solid, much better than many of the other parts of our JSE, with smaller companies with many more challenges facing them in our economy. Our banks still have, as I say, very strong balance sheets.
Actually, quite interesting, because I think we just take a breather for about 2 weeks and then it's earnings season again in the US and Europe. It's not like here. Just talking about counters abroad, let's go into the semiconductor industry. There's a question here. That industry is very competitive with everyone trying to eat the pie. I cannot identify a specific company that I can see being the leader for the next 10 years. I think NVIDIA people would disagree. So as there's a lot of competition and it's a very quickly evolving industry, the industry is very important for global economic growth. So would just buying an ETF for the industry be a better idea than trying to pick individual companies? Yeah, as I said, NVIDIA, NVIDIA people would disagree, but would you be going for an EFF that has a pool of them or going into specific stocks?
Yes, I think it's a great idea to diversify your exposure to a pool of them rather to trying to stick to one horse. Of course, we know that NVIDIA is still the market leader. They've got great they've got a great lead ahead of the market with their development and their large conductors and what they can accomplish with those up to now. But we have seen over the last month just that Intel, for instance, is bringing out a strong new chip that's going to be a big competition to NVIDIA going forward. Also, it's manufactured in the US. So a lot of these things will definitely mean more competition in the industry. Also, even though that there are barriers to entry, bigger moats for some of these companies like NVIDIA, who is by far the leader, as I said, it's a good thing if you want to be a long-term investor to hedge your bets and to rather diversify your opportunity set. So there are quite a few ETFs that focus specifically on the semiconductor space. One of the most well-known, and I think that's still the largest, the iShares, a semiconductor ETF that you can have a look at. And that'll probably give you a good exposure that's already more slanted to the leaders like NVIDIA and the others.
Well, if you had to choose between a semiconductor ETF, I know obviously these aren't parallel. What would you choose between buying a semiconductor ETF or buying shares in Meta platforms? So the viewer goes on to say, I like Meta platforms. I bought at $140, but I want more. So seeming that, the viewer's pretty split between the semiconductor ETF and Meta. What do you make of this choice?
Well, that's quite a strange comparison to me, to be honest, because I don't know what the rest of the listeners' portfolio looks like and what the diversification is. But if this is the only two things you hold, it's pretty focused on a very specific area of the market. I'd be worried about that. So I'd rather be more diversified than having only one stock. So if you're comparing Meta to an ETF, my clear answer would always be to have more diversification than one share. I mean, Meta has been trading quite positively. There's a lot of upside, but there's also still a lot of risk around all the developmental spend they do at the company. They have become profitable with the ad-driven side of the business, and that has been very positive for the business. So, great company, but having all your exposure on one horse is very, very dangerous.
All right. Well, the viewer clearly wanting to buy more Meta. And just, talking about US tech stocks, there's also been quite an interesting shift with a lot of people, for example, choosing Tencent process, saying that, there seems to be either a shift or there's going to be a shift from, US tech to Chinese tech. Do you think that this is a thing and that we might see a shift of people going into the cheaper tech, which is China facing?
Depends who these people you're referring to are, because if they sit in the US, that's definitely not the case that we're seeing. We're seeing a big shift in the US away from China from a sentiment point of view. So, and more onshoring of sentiment there, especially in an election year that we see this year. Globally, there's normally more sort of home bias in these sorts of years where there's elections in countries. So that is not a shift, as I say, that we see coming from specifically the West in predominantly the US. But yes, the Chinese shares and Chinese tech specifically has been very attractive and priced attractively for quite some time. There are quite a couple of reasons for. Firstly, as I mentioned, the sentiment risk around how the US sees it, how the US imports from China, how they placing embargoes in many of those companies, etc. And then, of course, the fact that we have seen quite a weak sort of economy in China, much weaker than we've seen over the last couple of years. There's not a lot of spend, there's a lot of saving, not a lot of capital investment at the moment going on. So all of those things play into a weaker economic environment, a deflationary economy that we've seen over the last couple of months, and it's not very positive for the growth of those companies. So difficult to say whether that value that you buy there will play out in a reasonable time, or whether it might be a value trap if sentiment turns further away from China. Hard to say, but there is good companies at very attractive prices. Just depends on how all these implications play out on them.
Yeah, of course, there's always that question if you actually get a good return there from the cheap shares, or if you're just going to be stuck in a value trap. Talking about traps, let's go into transaction capital, because we did see that share price moving down after We Buy Cars listed yesterday. I had transaction capital in my portfolio. The share price was trading around 10 Rand. And today, the share price is trading at 3 Rand 60. Is there any chance of a share price recovery? But also, I guess the first question, is it always the case that the share price will drop this much after a split? Is it all mechanics, or is it just sentiment, Mia, at this point? Is there any way of telling?
Well, it's hard. You'll have to go run the math and see firstly how the division is with the split. I must say I didn't keep my my math up to date over the last week or so. It's a small position that's not really one of our largest focuses. The fact is that they have diversified, or they have spun off that business. So now a more focused business left in transaction capital. It might be beneficial for them, as we know that the issues that We Buy Cars have brought into the business has now been stripped away from it. But yes, there's a lot of math that you'll have to run. There's no sort of rule of thumb that says when there's a spin-off of a company, then the parent company will be doing better or worse. It all depends on what's spun off and what's left.
All right. Well, Mia, before we get to your stock pick, question just came in, but there's actually a comment at the beginning of it. Mia, congrats on your surname change.
Oh, thank you. Appreciate it.
And then your take on African Rainbow Capital and Mustec. I don't know, a lot of people don't really look at Mustec.
Yeah. No, I don't follow it.
Yeah. African Rainbow Capital, of course, we know them for Time Bank and Rain. What's your sentiment on that?
Innovative group of people, innovative sort of ventures they're getting into and following. Yeah, so this is one of the areas where you can be sort of more excited to follow the clever capital in Africa. People who have done successful deals, people who know how it works. It doesn't mean it's going to be an easy or smooth ride. As we've also seen, in being invested in South Africa and in Africa and in emerging market is never a smooth ride, but at least you know you're partnering here with the smart money.
All right. Well, let us get to your stock pick, talking about smart money. Mia, where are you putting your money today?
So at the moment, as I said, there's a lot of sort of uncertainty of where the market's moving. We've seen much more breadth in the market. So we're actually moving away from specific positions that we have capitalized on that's done exceptionally well, especially on the tech side. And we're putting it into a broader based beta play, so ETF play of the US market really. And that's actually giving us sort of a broader exposure to some of the areas in the market that we're seeing recovering at the moment, that's adding value despite tech coming back a little bit due to the higher valuations. And now with the CPI print we had this past week, there is even a bigger normalization of the market, and that's what we've seen over the last couple of days. So we like the broader market exposure. So as I say, an ETF that gives you the exposure of the larger market, or the S&P 500 in the US.
All right. Well, thank you so much for your time and for your insights and analysis today, Mia. Really appreciate it. That was Mia Kriegler from Kruger International.